How to open a Gold IRA account tax and penalty free. If you have an IRA or 401k, are you worried about the possibility of a recession? Well, you're not alone. Protecting them may not be easy, but there is a way. Without getting penalized or taxed into oblivion, we're going to share how you can protect your life savings. Usually, when you take money out of a tax-advantaged account like an IRA or 401k, you might have to pay taxes and penalties. This can be a huge problem because the taxes could be over 20% and the penalty is over 10%, which means you could lose 30% almost instantly. Could that actually be worth it? Well, let's think back. If there's a chance you'll lose more than 50% of your investments, like in 2008, then it might be worth it for you to take the tax hit. But you don't have to, because there is a way to protect your retirement with physical gold and silver while it's still in the retirement account. Really. And here's how. What is a Gold IRA? Most people don't know this, but there's a special type of IRA account available to United States citizens. Some people use an IRA to invest in stocks, bonds, or shares in funds. But with this unique type of IRA, you can actually own physical gold. And the way it works is simple. You pick the specific coins or bars that you want to buy, where to store them, which company will manage them, and when and how you want to take a distribution. Interested in learning about investing in gold? Advantages of investing in gold. Investing in gold can have many benefits, even ones you never expected. Here's just a few of them. Diversify your portfolio. If something happens to the economy, diversification can be a way to hedge your gains and losses. Traditional IRA and 401k plans can offer a limited range of investment options, sometimes only a few dozen types of funds that invest in regular assets like stocks, bonds, funds. These options can make it difficult to protect your investments. But diversifying your investment portfolio with a Gold IRA may help you tilt the risk in your favor and may reduce your exposure to recessionary periods. Asset protection. But here's a secret many don't know. Central banks have been buying gold for decades, and there's only so much of it left. So it's all about supply and demand, which is why gold has maintained its value. For example, during the 2008 financial crisis, gold prices went up while the stock market went down. And from 2008 to 2011, gold prices tripled. If you think it would be a good idea to diversify your portfolio, you need to listen until the end. Wealth accumulation. Gold's performance has steadily increased at an annualized rate of nearly 9% since 2001. This means if you invested in gold, you may have hedged your money if you had invested in the market and in precious metals. But it gets better. Hedge against inflation. In the 1970s, when there was high inflation, the value of gold increased. Plus, the US dollar has continued to lose its value over time, while gold has gone up over the last 40 years. The decision to open a Gold IRA. Opening a Gold IRA can be a good choice. You can make this decision based on two important things, so pay close attention. 1, your personal financial goals, and 2, your current financial situation. Sounds simple enough, I know, but there's a few things you should keep in mind before making a decision. Gold IRA rules and regulations. For example, a Gold IRA is similar to other IRA accounts, which means there are rules to follow. Pay close attention so you don't run into problems. Ban on collectibles. Only certain coins from the US Mint can be held, and the coin has to meet a certain fineness requirement. So what does this mean for you? If you were planning on buying popular gold coins like South African Krugerrands or older American Double Eagle $20 gold coins for your Gold IRA, well, you're out of luck. Those coins do not meet the minimum fineness requirements for a Gold IRA. Gold coins that are purchased for a Gold IRA must have a fineness of at least 0.995, meaning they have a gold content of 99.5%. The only exception to this is for the American Gold Eagle series of gold coins minted currently by the U.S. Mint. If you tried to buy any other type of gold coin with your gold assets, it would be considered a distribution. Now listen very closely. This means you would have to pay taxes and penalties. So be careful when buying gold coins for a Gold IRA. Luckily, most mints produce gold coins that are specifically designed for Gold IRAs. Goldco has established special relationships with mints all over the world. This means we can offer you a variety of IRA-eligible gold coins. Taxes and penalties. This is very important. When you take a distribution from your Gold IRA, you'll have to pay taxes on the distribution. If you take the distribution before you turn 59 and a half, you might have to pay an additional 10% penalty. Simple enough. But the distributions from a Roth Gold IRA are the same as any other Roth IRA. This means for most people, if you're at least age 59 and a half and your Roth IRA has been open for at least 5 years, the distributions will be tax-free. If you are not yet 59 and a half or have not had the account for 5 years, you can still withdraw your contributions, but not your earnings. Maximum contributions. So this may sound good and you may be ready to protect your savings, but there may be some downsides you need to know about first. The maximum amount that you can contribute to your IRA accounts for 2023 is $6,500. So this means you're limited to how much money you can protect, which may be frustrating. But there's a loophole because if you already have an IRA or 401k, you can roll over or transfer money from other tax-advantaged accounts into your IRA account. This means if you have a 401k, 403b, TSP, or similar retirement account, you can move the money into your IRA without any limit. 100,000 or 1 million. The choice is yours. But make sure you listen to the possible catch, and here's how to work around that. Required minimum distributions. Just like other types of IRA accounts, a traditional Gold IRA forces you to take out required minimum distributions, RMDs. This means you have to take out a certain amount of money from your account each year. Right now, you have to start taking RMDs at 72, but there has been discussion in Congress about raising the age limit or doing away with RMDs altogether. Interestingly enough, Roth Gold IRAs are not subject to RMDs. Good information to have, but what does it mean for me and my investing? Funding a Gold IRA. What does it look like to get started? First, you'll need to decide how to fund it. The most common way to fund a Gold IRA is to transfer money from an existing tax-advantaged retirement account like an IRA, 401k, 403b, TSP, pension, or the like. This can be done by rolling over the funds or by withdrawing them and depositing them into the new Gold IRA account. Rollovers can come from 401k plans that have been forgotten for years or from workers who want to protect the assets they've worked so hard to build. And don't worry about doing this on your own. We have specialists who specifically do only this all day, every day. 3 steps to a Gold IRA. Now remember, there's 3 easy steps to getting started with a Gold IRA. First, you'll sign an agreement showing that you understand Goldco's terms of doing business. This is a document that outlines the rules and regulations for working with Goldco. Of course, we'll walk you through this process. The second thing is to transfer money out of your existing retirement account and roll it into your Gold IRA. Then, once your Gold IRA is funded, you'll choose the gold coins or bars that you want to buy. Goldco works with many mints around the world, so you can have a large selection of coins and bars in different sizes. If you decide to purchase coins, when you finalize the deal, you'll own physical gold coins or bars that are stored in a safe and secure place. Is a Gold IRA right for you? So if you found this information valuable and you're wondering, when should I get started? Many experts suggest the answer is now. A recession can be cyclical, and a common question is, how bad will it be? Because remember when people were saying everything was going to be okay in 2008, but then it seemed like the bottom fell out and the financial system was collapsing? So if there is another recession, it's better to be prepared ahead of time. This means you should call Goldco today or visit the link below and learn more about diversifying your portfolio with gold. But of course, the choice to protect your retirement is yours. If you found this information useful, watch the next video to learn more about protecting your investments.